All right, traders, we have a lot to go over. Tomorrow is going to be the CPI data. With that being said, I'm going to prepare you for the final bull trap that is coming up. We are hoping for a spike, and if we get that spike towards our key level, we're going to be swing trading puts. With that being said, as I had planned yesterday, I was planning to buy puts on the SPY at $389, and if it goes to $392, I was planning to add to those puts. And that was literally the high of day and top for the SPY. As you can see right here, I strategically planned this out. $389 and $392 will be my two key levels to buy puts on the SPY. I ended up alerting my trade in real time, as always, within Trader Society with the best setups, the best prices. I took a heavy starter position. I bought six figures, 100K worth of April 21st, very safe puts to get in and out of. And I took those at 11:33 a.m. when SPY was at the peak at 389. And then right here, when SPY was at the lows at 1:06 p.m., when this was at 386, I told people, play it safe and take your profits. I decided to hold a little bit longer, and when it spiked back to 387, 2 points below my entry, I sold my puts for a 20% win, making 20K. As a team, as Trader Society, this is now our second over six-figure profit day collectively as a whole. Look at the polls. Last Friday, 66 green, 6 red. Today, 57 green, 7 red. How are these people going red when I'm giving them the exact high of day a day before it actually happens? This played out perfectly, and we decided to not swing trade puts. This was the main reason why we didn't swing trade the puts. First of all, I don't want to hold through CPI. If I'm up 20% on a large position, I'm taking my profits. And this is another reason why I decided to not swing trade puts. Right here, I said SPY loves to screw both sides before the big move comes. The most likable outcome, since we are gapping up at $390, when the market opens, SPY's going to start to trap the bulls and go back to fill the gap. And that's what happened. It went back to fill the gap, right? And then when CPI comes out, that's when the bears get trapped. It spikes back to 389 to 392 for the grand finale to trap the bulls one last time. So that's what I'm hoping for heading into tomorrow, to get back in to actually swing trade the puts. But with that being said, I'm going to get into the newly updated price action analysis. I want to give a big shout out to my team. Big shout out to Top G and big shout out to Z-Man. For those of you who are new in the chat room, Z-Man used to be Bobby. He's a phenomenal trader. He's a scalper. He gets in and he gets out and he trades the best setups at the best prices. You're not going to see him a lot within the chat. He steps in when a phenomenal opportunity presents itself, and he's the one who brought awareness to that last video that I made. So for those of you who want to get a better understanding of how I was able to buy puts at the exact peak today at $389, watch my last video. It's going to also prepare you for tomorrow. The video that I posted yesterday is still relevant for our trading plan. So this is what you need to understand. So in terms of the SPY, the weekly pattern that we brought awareness to in yesterday's video is still repeating itself. The pattern is still repeating itself. So if we go back and take a look at this pattern, I'm going to show you it. We're going to look at the weekly chart here, right? This is the macro time frame. Right here, SPY has a gap down. See the little gap? It has a gap down. Red bearish candle, green bullish candle, red bearish candle. And then right here on the 5th week, it gets absolutely crushed. The same pattern is happening. Look at this, folks. It has a small little gap down right here, red bearish candlestick, green bullish candlestick, big red bearish candlestick. And then as you can see, this is now the 5th week, and look at what it's starting to do. It's starting to top out at that key level. What did it do last time with this pattern? You can visually see right here, if you look at the pattern last time, so this is where it closed. It closed at 385.56, and then right here, same pattern. It closed at 385.91. Last time it spiked to a high of 389.31. So it spiked like 4 points. It spiked like 4 points basically above the previous week's closing price. Then after that, it sold off hard and it got crushed. And you could see it's already doing the same thing. The previous closing week was at $385.91 and it spiked to $390.39. Isn't that crazy how it's repeating to an exact T? This is how I'm able to be so accurate, because I capture trends. I capture patterns. I trade the chart. and history is consistently repeating itself until it doesn't. And then when it stops repeating itself, I get stopped out and I cut my loss. So what you need to understand is the trend is still working and we are in the process of a big potential sell-off, right? So if you just visually look at this pattern, and please go back and watch the video that I posted yesterday because it goes more in depth on the overall macro price action on why March should be a very, very bearish overall ending month. But if you just look at this, SPY has a gap down. It opens up lower than it previously closes. It has a gap down. Red bearish candlestick. SPY has a gap down. It opens up lower than it previously closes. Red bearish candlestick, right? So you see the pattern, you see how it's repeating itself identically. And then what happens the next week? The next week, you have a nice green bullish spike. And then the next week, you have a nice green bullish spike. Notice how it went a little bit lower than last week, and then it went a little bit higher. Notice how it went a little bit lower than last week, then it went a little bit higher. See how it keeps repeating itself? When you see something that's repeating itself identically, that's when you get confident to start playing the best setups at the best prices with the trend, with the levels, with the macro bearish trend. Look at this week right here. What happens? SPY goes up to fill the gap. It breaks out a little bit, and then it breaks down. Same exact thing. SPY goes up to fill the gap, it breaks out a little bit, and then it breaks down. What happens on this week right here, which is where we are now based off the pattern? It spikes 4 points above the previous week's closing, and then it sells off. It spikes 4 points above the previous week's closing, and it sells off. That's how I was able to get in at the exact top, because I measured the move. I told myself, okay, these are the two most likable entries. A 4-point spike above the previous closing week, which was the exact peak, or it just goes back to the previous week's low, which was right here where it topped out. And the previous week's low is right here at 392.33. That's why I also said 392.33. But if it were to repeat itself identically, what it did, it would spike 4 points above the previous closing week, which is what it did. Previous week closed at like 386. It spiked to 390. Literally identical. So when I saw all of these bearish confirmations on the 30-minute chart, yes, I was getting in on puts. This was an absolute no-brainer, folks, and we took advantage of this in real time within Trader Society, getting puts at the exact peak, and we strategically planned this 1 day in advance. So you let me know who else is doing it, who else is calling the exact high of day 1 day in advance, and then taking action on that trading plan, and then alerting their team in real time with their entry and exit to follow through with that actual plan. Because this is what we are doing within Trader Society, guys, and the results are speaking for themselves. We have many members who join the program, and they make back multiple costs of the program within their single first week. This guy just made over 13 times the cost of the program in 1 single day. I'm telling you, the results are all here, folks. So with that being said, if you want to be a part of it, it's the first link down below in the description. It's a one-time fee and it's lifetime access to everything. All of the information is explained down below. Now, what you need to understand, what you need to understand heading into tomorrow is we have CPI. So it's either going to spike or it's either going to crash, and then we have to see what it does from there. Basically, this is what I'm hoping for. I am hoping for a spike, and I'm hoping for a retest back to our key levels. What are the two key levels? The two key levels are going to be 389 to 390, that zone, and $392. Those are two key levels. 392 is the higher one, 389 to 390. Now, with this particular opportunity, if we do spike back, I do not care about getting in at 392. I am more than willing to get in at 389 to 390 heavy starters and then save some for 392 if I get squeezed, right? The reason why is this is a macro swing trade. I'm expecting a massive crash by the end of March. In terms of what can flip that and what can actually change the trend. So in my opinion, for this to actually flip bullish, what would need to happen is they need to break above this level. They need to break above this level right here, $394. If they can't break above $394 and turn that into a floor, into a support level, right now this is heavy resistance. You could see it used to be a previous support level on the 30-minute chart. Right around here it was previous support with big upside potential. Now it's a double top with major resistance and it keeps going lower, right? So basically, I am fully convinced no matter what happens tomorrow, we are confirmed and still confirmed macro bearish as long as 394 reacts as a ceiling, right? And the absolute most that I would risk on this swing trade that I'm taking would be above 397. I would not risk above 397. 397 is your next level. That's like towards the max paying this 397, 398, right? But basically, as long as we continue to stay under 394, we're going to be macro bearish. I'm going to be targeting 389 to 392 puts. The reason why I'm going to be targeting puts at those levels is based off the trend that is consistently repeating itself, right? So we're going to have to see how this reacts. And then in terms of CPI heading into tomorrow, I'm going to look to see who gets screwed. I'm going to see where the bears get screwed. I'm going to see where the bulls get screwed. I'm going to see where the big moves are happening. So if it has a massive spike and then it drops in the pre-market or it drops towards market open, I will know the best level to buy puts along with my best levels. If it has a massive dip and then it spikes, I will know the best level to be buying puts because I already know 389 to 392. So we have to wait. We have to wait and see. But the trade's already confirmed and I already want to get in. All I need is a spike. Like I said, we are in a macro bearish month. The spikes are going to be gifts as a team as a whole for the people who decided to not swing trade the entry that I gave them at 389, which I believe is a great entry. And if they want to swing trade loan or puts April 21st, all the power to them. I believe that's completely fine. But if I'm up 20% and I think there's a high probability that this can potentially spike back, I'm just going to take my gains and play it safe. And if I miss out on the swing trade and I miss out on the best entry, then so be it. I'm okay with that. I already made 20K on it. But with that being said, for the people who did not swing trade, we are hoping for a spike and we're looking to get in towards that 389 to 392 zone. But what's going to matter if this does spike, that's going to be a little bit less relevant. I'm just going to focus on where it actually crashes from along with my entries. So if it's having a nice spike and I see it crash, I know where the new best entry is, along with my actual entries that I want to get in at, right? So that's what I'd want you to focus on tomorrow. You need to be focusing on puts towards the spikes, towards the key zones. We are in a macro bearish market. This crash today should give you more confidence heading into tomorrow. We're hoping for one last little, spike for another massive grand finale bull trap. Like I said, and this has been repeating itself, and this is why I sold my puts. And if I missed the move, then so be it. I played it safe and I took my 20K profit. But like I said, SPY loves to screw both sides before the big move. And we know after CPI, there's going to be a big move. And the most likable outcome, since we are gapping up, since it's spiking, the most likable outcome is it traps the bulls and goes back to fill the gap at 386. And it closed under the gap. It closed under 386. So I was right. And then I said CPI comes out, the bears get trapped, and we spike back to 390s. And then that's the grand finale where the bulls get trapped for the grand finale. And then once we crack 384, this is a bloodbath. So this is another level that I need you to bring awareness. So if you're wondering, well, Will, when is this bloodbath going to happen where the support finally cracks and gets destroyed, right? In terms of that, the level is this. This is the level. So let me show you. We're going to go back to that weekly chart that I was bringing awareness to. So here, let me zoom out of this here real quick and show you what it is that I'm actually talking about. This 384 and 386, that's like a dark pull level. You can keep an eye on 386, but for me, 384, this is the level that I'm keeping a close eye on. So look, it spiked back. See how it spiked back like 4 points above the closing price, 4 points above the closing, and then it touched this like low right here of the previous week. So it just spiked back 4 points above the previous closing, and it nearly touched this right here. This is 392. So it's doing like the same thing, right? Once it goes back under the low, so once it goes back under this low, 384.32 of last week, that's when it triggers. That's when you're going to see it trigger. When 384, last week's low, is a roof, is a ceiling, is resistance, it's cracking down, you are going to see likely a bloodbath, and it's likely going to try to go straight to 380 and then crack 380. It's going to be an absolute bloodbath. My bloodbath level is 384. That's going to be my key level. This was just at 384, $380 and 49 cents, man. Absolutely insane. We discuss this all the time, man. This was so predictable in a sense of how SPY played out. And we knew this a day, in advance, right? We know this all the time. If SPY gaps down, we don't do puts. I didn't do puts in the morning because I know if this has a big gap down at support, they're going to screw the bears and they're going to trap the bears. That's why I didn't do puts directly at the market open. I waited for the gap to fill, and it was still looking bullish. And the strategy told me, my plan told me to wait for 389. It's crazy. You could have day traded this as a gap close reversal, had a nice little scalp. It worked. But I was focused on the macro bearish trend. I was not focused on scalping today. I was focused on my big swing trade idea, which turned into a day trade because it already crashed. That's why. And I'm not going to hold through CPI if I'm already up nicely. I'm not going to take that extra risk. If I'm down in bearish, then I'll just hold through and add if it spikes because it's a macro leap play. But if I'm up and it's already at a nice level, I'm going to take my gains and just hope for it to spike back tomorrow. And if it doesn't, it doesn't. It is what it is. I already made money, right? But I knew 389 because of the macro time frame. See, if I ignored the macro time frame, I would have been more focused on this 386 level for puts, which did work for a nice little scalp, a nice little pullback. It did work. But based off of that macro trend in that video that I posted yesterday, I went with 389, and that is why. And it's pretty crazy because this topped out at my hierarchy level in the pre-market. This topped out at that 392 level. So not only did I predict the high on the intraday chart, but I literally predicted the highs on the pre-market chart a day in advance. This was topping in the 392s. And then intraday, I bought puts at 1130, so I bought puts right around here at 1130 when this was at 389, right here at 389. And yeah, it was a phenomenal trade, man. It was a phenomenal trade. I told people to get out when it dipped to 386, and then I got out at 387 for a 20% win, and then it spiked all the way back to my initial entry, and then it dropped right back down. Pretty crazy. So that's the game plan, that's the play, and that's what we're going to be focused on tomorrow. So just please understand, guys, in terms of the market that we are currently in, as long as 394 is a roof, as long as we're staying under that, if you want to even risk a little bit more, 397, as long as that is our roof zone, we are going to be macro bearish. We're going to see a big crash. And basically, in my opinion, once we go back to 384, next time we go back to 384 after CPI is released, so after all the news is released, when the market opens, when we do drop back to 384, that's when I believe the next bloodbath is going to be. Next time we retest 384 after all the news and all that, when the market's actually open, I think if we retest 384 and it goes under and it reacts as a resistance, I think that's going to trigger the bloodbath, and that's going to trigger that very, very bearish week. So just pay attention because the big move is here and the volatility is here and the big move is coming. I mean, just look at what it did last time. Last time it closed at like 380, 385.56, and this time it closed at 386. Next week, the high was at 389.31, and right now, the high is 390.39, so like the same thing. And it dropped all the way down to 363. It went all the way down to 363. I'm not looking for that big of a crash, but I'm definitely looking for this 375 level to be scaling out and selling my profits in this 375. So my idea is a swing trade. I just have to get my levels and I have to see from there, right? Another key level to keep an eye on is where it closed at. It closed at the dark pool print level, which is at 385.36. So the best levels that I'm going to be eyeballing are 392 and you could say 390, 389. The middle is 385, 385.50, 386, going to be eyeing that as well. And then 384, once we take that out, absolute bloodbath. But that's after the news, not before. I'm not speaking for before the news, right? And I would like to see some sort of bearish candlestick on the daily to consider actually swing trading the put as well. So it could end up being another day trade. Likely not, though. I am looking to swing trade this one. But we do need to see. We do need to see how we react, right? Because I like swing trading with bearish confirmations. This is interesting. It's a very interesting chart that is setting up, and we must wait and see how this actually reacts heading into tomorrow. But those are the key levels. That's the game plan. If you do want to be part of Trader Society, it is the first link down below in the description. We will teach you how to scalp like a sniper, how to trade like a sniper, and we are also going to be doing swing trading as well. So with that being said, if you want to join, it's the first link down below in the description. I will see you guys tomorrow live at Market Open.